There's no doubt that the market's been ripping up this year, and it's been great. But as the market begins to get a little bit choppy here, we're starting to notice some cross currents in the market, and that's what we're going to explore today. So stick with me. My name is Brian Cannon, and welcome to Markets in 5. All right, so let's dig into the latest chart of the S&P 500. You can see that when the market gets a little bit overbought up here, as reflected in the RSI, and drops down. Obviously, the market drops down a little bit, but it is bouncing around this 50 50 level. And again, anytime the stocks are below and trend below the 50, the market's usually in trouble. Anytime it's above 50, the market's trending very well. So you can see here that it's bouncing around this 50 RSI, and so it's trying to find direction. So there's this kind of this pull and tug between the bulls and the bears at this point. We're trying to find a direction, and in the meantime, you can see that there is a kind of a medium-term uptrend here that is somewhat being respected. And but in the short term, you've got kind of this cross current where you've got almost a little bit of lower highs, lower lows, and it's starting to build up here a little bit. So this the market will either break above its 20 and 50 and come back up and test this upper resistance here, or it potentially could drop down. And if it drops down, then obviously we would be looking toward somewhere around the 200-day moving average as a support level. So but assuming that the market just is kind of consolidating the gains here, this was kind of the easy money, if you will. Now it's kind of chopping around. So it's not uncommon to, after a large run up, to begin to consolidate some of those gains and then let the market kind of catch its breath, and ultimately determine does it break up and out of this short-term cross current down and remain in its uptrend, or does it break down? So we're watching that very, very closely. But if we take that same chart and we take some of the noise out of it, you can see that there is a clear diamond pattern. And so anytime there's a diamond pattern, either at the very top of a trend or the very bottom of a trend, it could signal a reversal. So again, diamonds aren't, they don't, if they break down, then they will essentially, be confirmed a diamond pattern. It could just chop around here sideways and break up and might not be a diamond pattern, but we're watching that very closely, because what you don't want is to get back some of the gains that we've had this year. All right, this is a prime example of our style of trading. So we are very much swing traders. We want to make sure that we're buying the support levels and selling the resistance levels. And so this is a trade that we had put on. So if you look back over the last maybe a couple of years, Nucor, which is a play on steel, essentially was in a downtrend. It found a little bit of support down here and then eventually broke out with this green arrow right here. So lower highs, lower lows, had a breakout, right? And so a trend isn't a trend until you get several support levels. And so it came down and it hit this very respected support level. So multiple kind of well-respected line, multiple traders and buyers came back into the market. So when this uptrend has continued and we had a reversal of a short-term downtrend, we put this trade on right around here. And so our anticipation was to take it off kind of close to the upper end of this range, which would have been a nice kind of short-term trade, but it kept going. And so when it continues to go, then we want to make sure that we're capturing as much of this trade and don't have it come all the way back down. I'm a big mean reversion guy. I believe that stocks ultimately eventually come down back to their mean. And so that's obviously giving up all of the gains. So when we got the breakout, we bought and carried it through. And then now we're looking for an exit up here. And so when we have higher highs and higher lows, we want to stay in this trade. But then when we get this shorter term trend break down, then it's time to take profits. And so this trade inside of literally less than a couple months kind of produced a really healthy 50+% return for us. And so as long as you're sticking to a process where you're buying low and selling high, the numbers will work out for you. And so we do this on all of our trades for every single thing in our position in our portfolios. And so this is just a prime example of kind of how we do it, what our process is. And, the key is to have a process and to follow that process. And, it works. So although there's definitely some mixed signals in the market, as long as you have a process and you follow that process, and that process involves buying low and selling high, you should be okay. But if you have any questions, give me a shout, and I'll see you on the next Markets in 5.